morning, everybody. It's October 16th. Already mid-October. It's crazy. I'm with Imran for our Monday morning meeting. How are you doing this morning?
Good, man. Good to see you.
Good to see you. Lots going on this week. Just a crazy amount of stuff. Mainly earnings. We also have the unfortunate situation in the Middle East. We got Powell talking on Thursday. And so we're trying to navigate trade ideas around a shifting I don't know what you call it, multi-surface matrix. I want to start real quick with earnings because as we go through our trades here, this is something that's overshadowing. I think a lot of what's coming up in my morning scans and probably yours as well, in that a lot of implied vols are kind of the surface a little weird with a lot of these names because earnings are coming up. We have Schwab here, which probably just dropped. And then the big one that everyone's going to be watching later this week is Tesla and Netflix. You have a couple names as well that are you have a trade here that's going to come out, or excuse me, you have a trade that you're going to express before earnings. And so what I just wanted to point to everyone to in this situation is, hey, watch out for earnings. If you see implied vols, which seem like they're rich for no apparent reason, is probably because of earnings. And let me plug this site real quick. If you go to free resources, hit free tools, there's an implied earnings chart there, which you can see all the implied moves and upcoming earnings for the next couple of weeks. So, Imran, I love your dashboard, your single stock strategy compass here. Let's start with you. You got PayPal, and then you also have JP Morgan. So why don't we start with PayPal? Walk us through that trade.
So, the framework here is always I try and find a short-term trade, which we call the YOLO trade, and a swing trade, which is a bit more medium-term. So the thing that kind of has come up on the radar from a short-term perspective is PayPal's pretty oversold right now. Mm-hmm. It's traded down through recent lows. It's got earnings on the 1st of November. So what I quite like doing, and this worked quite well on JP Morgan, which I think a week or two ago we pitched the idea of selling puts on JP Morgan that expired before the earnings date. Right. You said the stock had kind of had a move and we were like, it's probably not going to dump too much more from here before earnings. So we're going to sell the options that expire before earnings and then it can have its move. Now, as it turned out, it had to move higher. But the point was those options did cash in on their premium. So it's a similar sort of idea here for PayPal. The earnings are on the 1st of November. So if you go for 27th of October downside puts, you look where the stock is, it's kind of 55-ish. You can sell the 52 puts, take in just under 1% of premium. And the idea being that quite a lot of bearishness is priced into the stock already. So we think it can settle here and it doesn't need to have a big breakdown through 52 before earnings. It can do what the hell it wants post earnings, right? But we would be long gone by then, and hopefully these puts would have expired in the money, or out the money. Sorry, because we're selling them. Right.
I like this trade. I like this general idea, and I think it's something that you could pull up in a lot of names that I was looking at. There's a slew of earnings I think you could play this on, right? And you could see this is the term structure for PayPal. You can see here's the earnings date baked in on the 11/3 expiration. So this is the one we want to play the trade, or Imran suggesting to play the trade before that. To make sure that you're not messing with the earnings there. So I like this one. Nice find there, Imran. And then let's pick up on your second one, JP Morgan, which is the name we talked about either last week or the week before, I think came up on one of your scans.
Exactly, yeah. And you saw it was down near the bottom Bollinger Band when we talked about it. We were saying we think selling those downsides made sense, and that actually did work. If anyone did that trade.
Quite a candle there, huh?
Yeah, we had the big earnings. We had the earnings. They beat expectations. It popped 3%, but it got faded. So that looks like a bit of a hammer candle there where the wick is massive and it's just kind of gave back most of the move. It did gap a little higher though, right? But
yes.
Jamie Dimon acknowledging that they're over-earning right now in terms of basically saying it's not sustainable, this net interest income that they're making, and they've got very low credit costs right now. So he sees that changing, and the stock has kind of responded to that, right? So idea being we're back near the top end of the range, the earnings are out the way. If you are sort of more medium-term bearish and you do see some broader weakness in the market, then getting into some downside again now that the selling puts has kind of worked, getting into some downside. But I would kind of position it in December. I wouldn't go too short dated. I still, my sort of general market feel is that the market's got a bit of upside in the near term, but we could see further weakness later down the line. So I'd go, if I was going to get bearish, I'd go out to December at the very least. and some 140 puts don't look too bad value now that we've had a little bit of a vol reset post earnings.
Now, any particular reason you go long put versus maybe selling calls as the implied vol kind of come out of this thing to the upside, or there's not a particular?
No, just to stay a bit safe, really. It's kind of, if the vol was like, for example, you look at my strategy compass, right? If we were above the horizontal axes and therefore implied vols were above median levels and a bit rich, then I'd be more inclined to sell calls. And also, if I sell calls, I may well sell something a bit shorter dated to earn that premium faster. But because I'm thinking the bearish position for me makes more sense a little bit longer term. So if I'm going longer out, then also the vol's not above median levels, then I'm not really feeling that happy about selling the outright call, basically.
Right, and some of that vol, I suppose, came out because of earnings. So you could also probably make the case that if vol did come out, then maybe owning the options here would be a better choice. So
yeah, and absolute vol levels aren't that expensive in JP Morgan, right? It's not like a 30, 40 vol name, right? It's kind of on a 20 handle. So again, 20 handle, you know that it's probably going to have some macro correlation if macro markets do trade down into the, December sort of time, and we don't get our year-end rally that everyone's hoping for, then JP probably goes down with it, right?
Yeah, I think one of the interesting things, and I don't want to go too off topic here, is that a lot of these names, and you can see here to your point, implied vol for JP Morgan 22 is the 1 month kind of at the money. So on a realized of 14, 15. So I do think it's an interesting idea, particularly if rates do increase and some of these other banks like Schwab and the like are having some problems, and that downside may be interesting. I have two for you here. Let me know what you think about these. I tried to quickly emulate your very pretty spreadsheet. I'm going to get better and catch up to the Imran level of quality here, but give me a minute. So I have one quick hitter here. This is kind of my YOLO for the next 2 days. The implied vol premium that I see, essentially the VIX over 1 month realized, really popped on Friday because of, I think what it kind of boils down to is people wanted hedges over the weekend due to the conflict in the Middle East. And I think whether that's demand or brokers just widening out their spreads, whatever it was, and the VIX really moved quite a bit, and vol seemed to really move relative to the S&P move. I think we were only down intraday. We were down 75 basis points open to close, and this was a pretty big VIX pop. We have VIX expiration on Wednesday, and so I like just putting on a very short-term trade. I like shorting UVXY or VXX. There's all sorts of different ways people like to play these things. Sometimes you can't just sell the stock because it's hard to borrow. So you can sell call spreads, you can buy puts, whatever it is. But I like playing this trade from today into I want to be out of the trade on Wednesday morning for VIX expiration or just after VIX expiration because I think the VIX expiration is going to help to kind of push the VIX down over the next couple of days. As you can see, we're already kind of down 4% this morning. So I think that this will get leaned on pretty well. Obviously, you're a VIX volatility space expert. How do you feel about that? I know it's a 2-day trade, but I think there's a good amount of juice in it right now. So it's one of the things that felt easy to propose this morning.
Yeah, look, I mean, clearly VIX has got a bit of froth in it. Like there was, I think it was 1.4 million call options were trading on Friday, which is a pretty big spike in call volume and on the VIX. So the VVIX went to the moon, went to like 110 again. VIX obviously touched 20 again. So there is premium, but it is a war risk premium that people got scared into the weekend. So we don't know how many weekends this can go on for. So I hear you generally on the VIX expiries, we do tend to see pressure.
Particularly when there's this much premium to it.
Yeah, but when you've got this massive event risk that no one's got a clue, like when's it going to get resolved, it might be a case of there's bigger forces at play. So who knows? But in general, yeah, I'm the same way around on the VIX. I like owning, but I'm actually, the way I see the VIX is, I think the VIX gravity will kick in, but I don't know when it will kick in. So I would rather buy more time. So I like owning November VIX puts, for example, right? Before the vol went crazy. But like even November VIX puts, like you could own, they're quite out of the money now, but the 15 puts, for example, you get those on 20 cents on Friday, right? They could go to 60 to 80 cents pretty quickly if we got a 2-week vol smash, right? Which could easily happen if things de-escalate and the S&P can bounce and we get some half-decent earnings out of the tech names. So I think that's not a bad way to do it. VXX, I agree, can crumble as well. If we go back into contango, I actually am holding a VXX position right now, which my subscribers know about, that I've had on for a while, which is a broken wing put fly, trying to play VXX down back towards 21. But that, again, that expires at the end of October. So I'm kind of giving myself a bit more time for VIX and VXX to come down, because I don't have such strong conviction that it can happen in a matter of days, basically. So that's how I'm thinking about it.
That makes sense. I personally sold some VXX and UVXY call spreads. I keep playing around to figure out what the best way to express that is, but my short-term view is simply that, hey, now that the markets are opening and kind of functioning, we could sell futures in the middle of the night if, God forbid, the situation gets that much worse. I also don't know what has to happen with the geopolitical situation to, really hit the stock market. I think it's really a catastrophic outcome, right? And at that point, maybe you don't care about the stock market, and God forbid that, God forbid something like that happens. So hopefully cooler has prevailed there. And Powell speaking on Thursday and the like. So I don't necessarily just want to get involved with that, or Tesla, Netflix earnings. So I thought this was kind of a quick shot. But I hear you on the VIX 15 puts. That makes sense for November. I like that trade as well. My next trade was Delta Airlines. The reason I thought Delta was interesting, just bring up the chart real quick, is it had earnings already. It did not react well to earnings. It sold off rather hard. And so, there's the stock, as you can see here, has gotten a pretty good beating, right? And so our implied vol scanner picked up a little bit of premium on here. I like this iron fly. Essentially what I want to do is I'm trying to extract some premium. So what I looked at is the November, essentially selling the 35 straddle, and then whether or not you want to add the wings, you can, but that was going for what it looked like about $2.60. I just think there's a good base in here for this stock and around this area. The earnings have gone. I don't know that there's a catalyst for the thing to really run much higher on you. So I just think that over the next week or two, this could really settle in. And again, with it being flagged on the implied vol premium side, even though earnings are out of the way, I thought that was kind of an interesting trade that lined up. Don't know if you have any comments on that one. Feel free to ignore it. Not necessarily a name I think you'd look at.
Yeah, I don't have a lot to say, but it seems reasonable. Yeah.
And then the last one here is an interesting one that we wade into the macro side of things, which I risk getting sort of my hand slapped by some of the macro pundits that float around. But TLT and XLU both show up on my volatility scanners as high implied relative to realized vol. And I understand that TLT cannot move the long vol complex. And I understand that the rates issue with XLU, I understand what's going on there. And what I propose here is actually buying long stock, because I actually think call implied vol might be a little bit rich for these particular instruments. And then, you have dividends and other things to consider in here. And so I like just getting long stock. And the reason is I have no macro view on this, but when I look at TLT, XLU had a pretty good pop last week. So this is off the, it was down near 50, right? 55 recently. But what I see in here that I think is interesting from a sentiment perspective is, even though TLT and XLU are coming down, puts are not being layered in at lower strikes at this point, which I think is the market expressing kind of, it's the rule of many, right? That I don't know if you've ever seen that game where if we all guess how many marbles are in a jar, right, that the consensus comes out to be pretty accurate. And so what I see here, and I can see your smirk because there's probably a whole bunch of macro reasons you don't do this, but I don't see any puts. It's sort of like people are not really betting, the options market is not really betting on XLU going down under 85, and it's the same thing with TLT under 85 and XLU under 55. And so I was looking at some covered call trades, maybe some different things like that, because I do think that you could find some kind of rich call implied vols. But I sort of went simplified and said, look, I think getting long stock on the basis of these things finding an interim low, based on the fact that it doesn't look to me like the market is betting that there's a whole lot of downside in these two sectors or two ETFs. So I know you got some comments on this one. Feel free to fire away on supporting or.
So I'll start with it. Definitely looked very, very oversold a week ago, and I was flagging that because skew was on the moon, vol was on the moon. I think TLT vol, short dated vol, got to like 25, which is pretty punchy for that.
Yeah.
And the skew got to like the 98th percentile, so the skew was super pumped as well for the puts. Now, my thought exactly was that spots oversold. We're kind of hitting peak panic here on bonds. So I was selling some short dated downside in TLT against some other positions that I had. But when we got the bounce, because the bounce was not just a dead cat bounce from it being oversold, because the bounce was driven by a bit of war fear comeback, right? A bit of safe haven bid. Mm-hmm. The vol didn't actually reset quite as hard as I thought it could do, right? So the question now becomes, if we get a rally in TLT from here, say to 92, 93, does that happen because of more war premium, more war flight to safety, or does it just happen because of something the Fed says, more dovish, blah, blah, blah? So I think we're in a bit of a weird situation, because those two outcomes are quite different in terms of what vol will do. So if we get more of a bid to bonds on a war bid, then vol will stay elevated in bonds. Vol won't come down, right? But if we get a rally on bonds because it's like the Fed's done hiking and and they've turned more dovish again and inflation's been beaten and all this sort of stuff, then I think you get a rally in TLT and vol gets annihilated in TLT, right? So it's a tough one to call right now. But so I don't actually mind owning TLT and then call overwriting it, because if you own it and call overwrite it, then you don't really care if it rallies, and it rallies sharply. Yeah. You just get taken out of your holding. So actually a buy right, that's called a buy right when you buy right. You sell the call. A buy right isn't a bad idea for if you're not already long bonds and you kind of don't mind dipping your toes in with some allocation to it, then an overwriting calls against that, given that vols are rich, I think it's quite sensible.
Yeah, and I believe the 1 month, I was getting this right, and I think the 1 month 87 strike TLT call, I could be wrong on this, but so I'll have to fact check me when the market opens here, but it was somewhere around $3, $2.50 to $3. And the reason that I didn't add that in is because I noticed this pays a monthly dividend, and I had to go through the kind of gymnastics of that. I was just sort of running out of time. So next time I'll be better prepared. But I thought the call overriding idea was quite interesting as well in that space. So, all right, you didn't slam me as bad as I was expecting on that one.
I would never slam you.
Actually, you should, man. If I'm sticking my neck out on something that's bad. It's always interesting to look at these option sentiment tools and saying, well, I mean, the macro space is so interesting now because there's like two sides of of a lot of these arguments on whether higher for longer or TGP, ROP, and then it turns out that both sides are wrong because like a war starts, right? So it's so hard to navigate this market right now. But again, that idea, that consensus, to me, I don't see put buying or activity below 85 is the reason I like. And again, to your point, vol may not come down even if TLT goes up. So if you own just the shares, then maybe you don't care all that much if we get a little bit of a pop. And also, to be clear, this is a short-term trade.
Yeah, I was going to say, is that a pop in TLT, whatever reason it's popping for, I still think it's probably a fade. I'm not sure the downtrend in this thing.
Yeah, I think you got to just reassess based on what happened. Again, Powell speaking on Thursday, so there's a whole bunch of other factors in there. So, all right, that about wraps it up for us. Again, you're on the PayPal. Imran's looking at PayPal puts. You want to short those? You want to buy some JP Morgan puts? And then I had a whole host of other trades you can go look at there. So, Imran, if people want to find you, how did they do that?
So I'm on Twitter, or let's call it X now, options_insight. Obviously, put loads of content out on there pretty regularly. And then options-insight.com is the website if you want to come and see what we actually do in more detail, what our products are, what our services are. We've got an options training course coming up, actually, for those who want to delve a bit deeper into the Greeks and stuff like that. In a couple of weeks at the weekend. So that's a live course. Come and check us out.
Awesome. And if you click the little QR code, if you scan that QR code in the top left of your screen, maybe it's top right, depending on how you're looking at it, that's our course called The Hedge, where Imran is the instructor for that. And he walks you through everything from what's an option up to advanced kind of portfolio hedging and the like. If you want to see more from me, I'm at Spot Gamma, and you can reach me at spotgamma.com. All right, Imran, we'll see you. I'm going to see you tomorrow for the OPEX course.
Yeah, that's right. Live, right? Expiry. Yeah, see you tomorrow, bud.
Yeah. All right, everybody. Take care.